Hi, I'm Money Mike. I teach personal finance stuff the way it should have been taught in school. Today we're talking about the stock market. What it is, how it works, and why it's not just rich people in suits yelling at TV screens. Imagine this. You start a lemonade stand outside your house. Business is booming. People love your secret recipe. Literally just water, lemons, and sugar. You're selling out by noon, and life is good. But what now? Well, you want to grow. You need more lemons, better cups, maybe a second stand across town, maybe a cash register that isn't just a shoebox, and definitely one of those flowy things they have at car dealerships. Problem is, you need money for that, and it would take you a long time to make that money just selling lemonade. So you bring in help. Your friend gives you money, and in return, you give them 10% of your business. Congrats, you just sold stock. Your friend now owns a piece of your lemonade empire. If after you buy all those new fancy things, your business grows, so does their slice. If it tanks, welp, that's the risk. This is basically what the stock market is. A place where people buy tiny pieces of companies. You've heard of Apple, Amazon, Nike. When you buy their stock, you're buying a slice, like owning a tiny percent of the world's most expensive pizza. Now, how can you buy stocks? Easy. Apps like Robinhood, Fidelity, Webull, and even Cash App let everyday people buy and sell stocks right from their phone. You don't need a suit, a briefcase, or a screaming broker named Chad. You just open an app, tap a button, and boom, you own part of a business. So why do people invest in the first place? One word, growth. You buy a stock hoping that the company crushes it. If they grow, you grow. Teamwork. Now yes, it can be risky. Companies don't always win. Some explode. Others just slowly fall apart. Blockbuster. But over time, the market usually trends up. So here's the bottom line. The stock market is a marketplace, like Amazon, but instead of buying shoes or phone chargers, you're buying tiny pieces of companies. That's it. You don't need to be rich to use it. You buy a share and you own a piece of the company. If the company does well, your piece gets more valuable. They flop, so does your money. Congrats. You know what the stock market is. Now, next time you order a venti iced brown sugar oat milk shaken something, maybe consider buying a tiny piece of Starbucks too. See you next time.